The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And this is another exciting day at TFNN. And another exciting day on the Power Trading Hour. This is your humble, lovable, squeezably soft host doing his duty one more day on a day where the market's not moving too fast, at least as for the broad markets. We're seeing a little bit of movements in the commodities, and we'll take a look at it. We're up 1 point on the S&P cash, 2.1 billion shares, 1.17 billion shares on the NASDAQ, and we're off 5 points on that. All within the margin of error, up 15 points on the Dow, if it even ever mattered, which it doesn't. So we have kind of a quiet day out here, starting to see the themes I think I've been talking about for a while start to develop, and we'll get into that in a little bit. But slow but steady drip, drip, drip on the way to the upside in these markets. And I thought maybe we'd be down around 2020 on the S&P for a close today. And maybe I'm about 10 points high, but still thinking that as far as short-term trades going on, not a great deal. I've got a couple of long-term trades in the Tech Insider. And long time, I mean 6-8 weeks, something like that. But the faster trades probably not set up right now, unless you're willing to take a extreme risk, which would be betting on the earnings. And I'm much rather wait for the earnings to come out and then play the other side of that trend. And we're going to get into what you're looking for out here. On this day in 1929, the stock market sludges through another day of murky panic as 2.4 million shares trade in the first half hour, one of the heaviest openings yet on record. Of course, this is just a little after the huge downside. By lunchtime, the market has slumped 6% in a disorderly trading fashion. J.P. Morgan wanders in and publicly starts buying stocks for his own account. He will lose a great deal of that money in the coming months. But it does at least make the market go sideways for a little while. At the same time, I think there were government officials saying that they were coming in and buying it. They lost a lot of their cash at the same time. That is the falling knife of 1929 on this day. I emailed this out to Andy Heck, but reading a lot more about what's going on in South America, it still looks like there's a huge problem with drought. I'm not exactly sure how it would affect commodities other than maybe coffee down there. But I thought it was very interesting to see that it's been nearly a month since many people have had running water in I-2, which is just outside Sao Paulo. And they continue to see a lot of no rain. In fact, there's huge amounts of no rain. There's no rain, which shouldn't be huge, right? It's a lack of rain. But this is the worst drought to hit Brazil in more than 8 decades. And I think that's going to continue to put pressure on it. The thing that probably not so much commodity-based, but so much of what we see now is the byproduct of our what I think is kind of a ridiculous policy, which is just keep throwing money at the problem until it solves itself in the economy. That, of course, is causing huge problems, especially in these heavily commodity-driven countries like Brazil. $6 tomato. Can you imagine that? That's what's happened in that country. If it's not $8 by now. But continue to look for that being problematic. CBS is going to start their own streaming. I really didn't talk about this last 2 days. I wanted to look a little bit more about what's going on. I suspect they're doing it because of the weakness of channels that really just don't care, kind of want to put a thumb in the eye of most of their viewers. CNN, of course, not doing very well at all, and they continue to drag people in that apparently are giving the wrong idea about what the news should be. At least people are not watching MSNBC. Only, I would say, fractionally more than what people listen to this show are. When you talk about the national landscape and being on cable systems everywhere all over the country, they should be doing more than having 70,000 people watch them in the morning. CNN, not much difference. And my thought here is that CBS is going to come in and take these guys out. Looking at them, when you got the Weather Channel blowing these guys away with 200 or 300% of the viewing time that CNN and MSNBC gets in the morning. There's going to be a lot of displacement in this. I think probably CBS streaming their news is probably not a bad idea out here, especially with, if you tried to get into that business, I imagine on cable it would be tough, but it would be even tougher to have to pay all those cable rates and access fees when you can just totally go around it. And it looks to me like the weakest of the news organizations, CNN and MSNBC, maybe short for this earth. MSNBC has been a loser for NBC for at least 5 or 6 years. The question is just how much they're going to have to lose until they shut that down. CNN may have a case that someone can come in there and fix it. They brought in 2 fixers. Both of them think that the model for news is appealing to the people in New York City. It has vastly failed. Other models basically target people all over the United States. Many people call that flyover country. And, of course, why some cable news outfits are doing 4 and 5 times the business of CNN. It is interesting. But I think, to me, the bigger thing is, can CBS just wipe out the weak, low-hanging fruit at a much lower cost, because they're not paying all these people to handle the distribution of their product. And I think it may be very interesting. I think this is going to be one of the good test cases out here to see just how well streaming goes around the traditional cable marketplace. There's not much news going on out here. I was going to get into the big themes out here, and if you've been listening to this show for the last 10 days or so, I've been talking about how the big moves are probably going to be related to short covering. I think Sears short covering had 10 days to cover. This is what happens even in a stock that's going out of business, and everybody knows it. But when you get everybody lined up on one side, it doesn't take long. We're seeing a little bit of that today. And I think these are counter trends in the long-term trend down. But what you don't want to be doing, especially in this time of year, is being short a lot of these stocks with high short interest and have an earnings surprise where they just aren't going out of business as soon as everybody thinks, and that's what happens. These stocks bounce. In the case of Sears, that's what it was. What do we have for the last quote out here? $44.74. That's up a whopping 37% today, folks. And it was higher than that. What was that high? $48.28. And if you're looking to make any money over the next 6 weeks, I don't think that there's going to be what programs do I watch? I don't watch any. Actually, I watch a little bit of CNBC and go right to reading, because it's much harder to influence and manipulate me when I'm reading something than all the emotion involved in watching TV news. So normally I'll go to the Drudge site first and see if there's any kind of things that would emotionally move everybody, and then I dig into a host of about 60 RSS feeds that I have for news, and I go through the headlines and find out if there's anything that I should really read about, or whether or not it's just another big drive-by shooting, as the most of the media does every day. They'll come back and hammer on something thinking it's real important, and it isn't. It just has to do with they're lazy and don't want to go out and find any real news stories. Much rather talk about something for half the day, like they did last week, that has nothing to do with profits on a slow news day. So everybody's trying to manipulate you. There is no pure and easy, wind-driven snow, pure news outlet. And I was actually I wouldn't call it an argument. I wouldn't call it argumentative, just a difference of opinion. Someone was at the restaurant last night was saying something, and he said, it's never been like this. You never had news organizations that were, taking a political stand. And I thought, what planet did this guy live on? There's all kinds of newspapers, name the Democrat, the Republican Star. They used to put this on the masthead of all the newspapers. If you went into town, there was always a conservative and a more left-leaning newspaper, and they put it right on the masthead. Why it's any different in cable news today, I don't understand, or at least I understand why people would like to pretend that all news outlets are down the middle, if that's the one they believe, but no one is. No one has a corner on the truth. But anyway, back to Sears Holding. It's all manipulation. Doesn't matter who you go into. You got to read it all like it's a spy giving you information, and they may be giving you, they may be a double counter spy versus spy. You got to basically figure out how they're trying to manipulate you, and maybe there's a kernel of truth in there somewhere. Anyway, Sears Holding, what do we have on that? It's just everything that you want to look at. In fact, someone brought this up on the in the den the other day, and I didn't. Did I do that? Short interest. You can get short interest, by the way, on SHLD on the internet. In fact, normally what I just do is type in short interest and the stock symbol, and it will actually pop up for me on open new window. Is that it? Yeah, there it is. And it will just pop up with a Google search, and then you can take a look at it. But here's what I was looking at, and this is what you don't want to be in. And you can see it, especially in the lead-in to the huge move down. There was 19 days to cover on Sears. Then there was 7 days. Then there were 11 days. You don't want to be much past 4 days and be short, and maybe 3 days even in this environment.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're kind of off on a tangent this morning, but probably, or this afternoon, but probably not a bad idea to talk a little bit about how you get your news out there. Some people were talking about Bloomberg, which is probably a great source for getting news if you're a trader. They tend to be the least emotional of the news services out there for financial news. Even them, though, I use a few tricks for watching news. One is I either listen to the audio or I watch the video with maybe subtitles turned on, and that's it. I don't want to get both sides of it and hammered on it. And most of the time, if the video's on, it's just because I'm watching maybe some tickers that I wouldn't be normally watching. But most of the time, what I'll do is fast forward through it and watch the closed caption if anything catches my imagination. I want to know what they're talking about. I don't want to believe whatever they're pushing for the agenda, but I do want to know what they think is important today and what is being pushed. Don't watch Kramer either. I do have a RSS feed where someone goes through and tells me all the stocks that he picks. So I don't have to listen to all of that either, but I have to at the same time know that he can move a stock, especially if he gets the less well-educated of his watchers doing stupid stuff. So you need to be aware of it. But most of the time I look at the news as one big lie, and how I can play the opposite side of that either today or someday. Steve Jobs probably said it best. You can only connect the dots backwards. Great discussion about how he came to put fonts in the original Macintosh in the 2005 announcement address to Stanford, which I recommend watching highly. I think it's only 15 minutes or 17 minutes on YouTube. But for the most part, don't watch a lot of news. I'll catch the I want to know what the tabloid news of the day is, just to catch it and get the zeitgeist of what's going on. But for the most part, I'll look at the Drudge site, because he basically has the most sensational news of the day. A great deal of reporting that won't go on somewhere else will be at least announced there. But most of the things I'm looking for is when the news comes out. If it's buried in the middle of the election night, like Tuesday night, and we find out that the government dumps a lot of documents, you know that's probably the worst documents, probably ready to go to the gas chamber kind of documents if they're going to do that. I look for the same thing in the regular business. And mostly what they'll try to do is after the bell about 4:30 or 5 o'clock, they'll try to shove all the bad news in as everybody's already left for the trading day. So you see a lot of, in fact, you'll see Tom do it a lot with his Bloomberg, and he's watching the news pretty much after the close, starting about 4:30 pretty hard on his Bloomberg, because that's when everybody buries the worst stuff. And they hope that people forget about it over the weekend. So it is interesting. I don't know what the deal is on that. Anyway, interesting news. Just, I'm not going to tell you that anybody is pure, but it is something we have to at least acknowledge. Probably less acknowledged in things like trading commodities. But for the most part, before Sears ever came out, you knew it was a hand grenade. All someone has to do is pull the pin, and you'll get that kind of reaction. But I'm going to tell you right now, the one thing that you want to be watching if you want to be making money is these stocks with super high short interest rates, because I'm starting to play some of these, and here is the deal. You're probably not going to make a great deal of money overnight without something like earnings like in Sears. But you can plant your flag on some of these that have fairly decent support and watch them go up 0.5%, 0.75% one day, back 0.25%, up 1%, back 0.3%. They'll just kind of sit there and do a drunkard's walk all the way up into December. And by the time you're done, you actually have some decent cash. If they're really short, you're going to get a stock operator out there that's going to just run these stocks. And don't think for a minute that there wasn't somebody behind Sears here that knew what was going on, was buying the stock, and probably out of it today with a 30% upside in this market. So watch out for the stock operators, because they're going to be out here hot and heavy, especially on this stock. And there are a bunch of them. Not the market as a whole, but there's probably 20 stocks out here or 30 stocks that have 30, 40% short interest. Watch out for those. They are hand grenades, landmines, whatever you want to call them. We'll be back on the
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Had a question of the den, and this Crestwood Midstream Partners LP. I don't know why anybody would buy an LP. I guess you could make some money trading it. I just don't have any real idea of going in and trying to figure out these companies. Basically, you're buying a percentage of something. In this case, I bet it's crude. I don't even know about this one. But I pretty much just go right on past anything that says LP. Processing, treating, compression, storage, natural gas. Okay. It's a nice little pop out here. It just doesn't make any sense to me. These things have a life of their own. It doesn't always correspond to what's going on underneath it. And almost always you're getting the scraps in this. I think Tom talks about the Sprout Fund Sprout, whoever that Canadian is that's got the deal where he takes most of the cash for your gold trade. All these LPs, for the most part, are that. You're putting money in either short or long and getting a whole lot less back. I just don't see a whole lot of reason for trading an LP or any of these partnerships or other stuff. Gold's kind of interesting in the fact that you've got the things like Royal Gold and the other ones that we talked about last Friday on Tom's show. But other than that, I don't have a lot to think about. We'll talk about gold here in a little bit, but I just don't see why you get involved. Nice pop today, but I think there are much better plays out here besides LPs. Yeah, pays a dividend. I'm not worried about that. Dividends don't give me 30 or 40% bounces, so it doesn't matter. I will continue looking for the big bears. Rabbits will just eventually make you go and starve. If anybody doesn't know about that, if you were one of the big mountain men and basically out trapping, if you didn't have bear meat and deer meat early and killed a few of them and jerked them for the winter, you'd have to live off rabbits for the most part. And, of course, the problem with that is they had no fat. And most of the mountain men that didn't have enough fatty meat and things put away for the winter would eat 10, 15 rabbits a day and still ended up starving to death. And to me, going after short money is that. It's eating rabbits, and eventually you're just going to starve yourself to death. I'm looking for some stuff that has some bigger moves out here. I found one. And I've got a position on that in the Tech Insider. I'm looking for more. Doesn't mean these things are going to pay off, but if they do pay off, I think that I've got maybe 70 to 100% upside in a few of these short squeezes. Because it's so high, all I have to do is have something like Sears come out or an operator, and that's what you're looking for is an operator in those stocks. Anyway, stocks that are moving out here, Antero Resources, a little pop out here, and let's see. Let me get my little list up here. I had it. I think I did something different out here. What is the name? This is AR to Antero Resources. It was on my list. I can't remember why it was. Okay, upgraded to overweight from equal weight at Capital One. But not a lot of volume as it's moving back up here, but it is one of the ones that's moving out here. It's above its high, and it's going to hold it here. DVita, this one missed. And let's see where I've got this thing out here. Beat Q3. And beat on revenues, but provided inline guidance, so no real growth, and this one fell today. Looks like it's probably going to come back and catch this low back here on the 16th of October. A lot of volume, though, and that could drive this thing all the way to $70.41, which is the low from July 31st out here. EV, SEC issued a notice of intent to grant an exemptive relief to permit the offering at the exchange trade managed funds. And I think that's about it. Grant exemptive relief to permit the offering of exchange traded managed funds. So they're going to get a lot of business off of selling and being in that business. Basically a broker-dealer out there. FI. Up 11 or 12%, reported Q3 earnings of 31 cents a share. That's about 3 cents better. Capital IQ estimate of 28 cents. Revenues rose almost 10%. So looking pretty good. This one is one I would have liked if this thing could have just gotten just a little lower. I would have really been all over something like this. October 14th. 1.2 million shares, $16.04. Tried to get back into it on October 27th. Couldn't get down there. Same kind of volume. But what was really nice is this nice push down a couple of days ago on 370,000 shares. If it would have gone down just 34 more cents test this on the low, would have been a huge buyout here, but a nice move for that one today. FNGN, which is Financial Engines. This one's taking a nice cliff dive with volume through the previous low of October 8th. What's this on? Maintained outlook, so doesn't look like things are going to get any better. And the street does not like that. But previous low out here, 570,000 shares. It's gone through it, but it looks like it's going to try to close into it at... but about 5 times the volume. So this thing just looks bad. I think if how far, yeah, I mean, you've blown through this low Why this thing could move sideways to the rest of the year. This thing's had enough volume and enough energy that it looks like it's eventually going to make its way back down to $18, which is the low of August 1st, 2012. Doesn't look like a whole lot to hold it other than continued selling pressure. So this is going to be an interesting stock to watch. GG, of course, Gold Corp. Nice pop in gold, of course, today. Gold is up $27. In these moves down, you're going to continue to have some nice pullbacks in the price, and we've got it up here today. But for all practical purposes, it's just gone up to resistance. My guess is that we're going to have this kind of up and down movement all the way till at least the end of the year on this thing. Again, I can't really step into this thing until we have a washout day, and maybe that means that I miss gold altogether. But I think that there is one long-term play on gold, and that is buying it on the next big washout. Didn't really have a blowout to the downside in gold, kind of a whimper. But my guess is this is a short interim bounce. And, of course, when you look at the dollar index, we're off 37 cents on it. I still think that we're going to come back over the next few weeks and break through probably 90 to 92. And it's unclear what's going to cause that, but it certainly looks to me like it. And I don't have a dog in this hunt. A lot of cash being made today. In gold and gold stocks, but I would be fairly quick to exit stage right if I had profits. Maybe you get another day or two of them out here. General Mills, one of the first stocks here that really is starting to talk about the problem with Forex and the cost of goods and shipping it around, especially to third world countries. In South America. GIS, of course, the symbol on this, down on fairly decent volume. Looks like it's in a trading range back down to this $48.32 low on 4.5 million shares. So not a whole lot there to be surprised, other than they are the first to really talk about Forex really starting to come in and move stocks. Humana reported Q3 earnings that missed consensus by 15 cents. Announced intention to initiate a $500 million accelerated share repurchase program. Still not helping this a great deal. Of course, was at $140.65 last night. Got to a low of $130.43 today on monster volume. Looks like it would work its way at least back down to 121, which is the October 15th low out here. But even then, it's going to be tough to get a lot of sales of these stocks going before the end of the year. Intercept Pharmaceuticals, this one's down on fairly heavy volume, but staying in the trading range, at least above the October 15th low out here at 176.13. What did they have to say about this one? ICPT. Clinical data was poor. Reports out that the company will need to run additional safety studies, and basically that means is there's a good chance this thing won't have that drug come out on the market. This thing's in a monster gap out here, and I'll show it right there. And that's what you have to worry about. This thing has entered that gap with huge volume. This could take you all the way back to the $70 level. I don't know enough about ICPT and the drugs itself. I'll look at it over this weekend. But a lot of times that's not the kind of news that you want to see in a biotech, because that's generally when they ask for more studies, about 80% of those never make it out the door. And that's why you've got the huge move off here today. My guess is that we're going to hear more information about what studies need to be run, and if it's a big problem, this is going to probably come fill all that gap all the way back down to the $70 level, so you want to keep an eye on that. You can always give me a call at 877-927-6648, 877-927-6648. Coal companies, nice bounce, CIN, BTU. Yeah, I don't know if that's going to make any long-term difference out here, just some of those companies bouncing. Is Dow theory in play? I don't think that there's anything to the Dow theory, so I don't really won't really comment on it. It's like saying is astrology or some other, let's say, lamb bones on the top of a garbage tank lid are telling me what stocks are doing. It's just not my bag. I don't think that they do anything. Monster Beverage, a nice little pop. Now, of course, this one was absolutely getting beat up a year ago, of course, because of a lot of people were out running 400 miles in a marathon and then swilling down huge amounts of Monster energy drinks. And a few people died. It's unclear whether they truly had anything to do with it. Maybe the people were just morons for out running in the desert to begin with. Maybe the people would have died anyway. There's no way to tell on a lot of those things. But it kind of put that behind it. It did gap up with huge and intense volume, and it is doing that again. Q3 results, most of those teenagers are back to swilling down the enormous amounts of sugar, caffeine, and other, I wouldn't call them drugs, but additives out there, and probably doing a great deal of vodka and Monster energy drinks. I think that's isn't it? The one that gives you wings and all these things are in drinks with vodka. I think that's what everybody drinks. Caffeine and ephedra, lots of drinks because it's both a depressant and a accelerant. The kids I know like to do that with some come out and SDP, please, with a side of ether. But they're continuing to buy it. That's all that matters, as long as it's legal. And, of course, probably some people are going to swill down too much about it. We talked about Sears out here. This thing's gone right up to the gap, went into it today. You can't make a lot more about that. I would have been selling this thing as soon as it hit that gap at 45. It did go to 48.25. And my guess is you're going to see about probably 5 days of this thing taking people that were short way too long in this thing. You want to be out shorts unless you are only looking at about a day or two and not on earnings on these things. They will take your head off. SLXP, the disaster du jour. Let me find this one out here. Missed estimates by 2 cents, missed on guidance, guiding down revenues below consensus. CFO resigned. That's really, when you look at this thing, why this thing is blown out to the downside and why you have to give these stocks a huge amount of room and around them. I'm going to show you another stock that the CFO is leaving. But normally the problem with the CFO leaving, at least the thought, is that there is going to be more aggressive accounting, more liberal accounting, and the current CFO was not willing to sign off on it. And so he leaves. They bring somebody in that's maybe we can put that into accounts receivable instead of receivable accounts. And we can move this and we can move that. And maybe it's GAAP, maybe it's not. I'll sign off on it. So it is always one of those problems. We get back, we'll talk about another stock that has a CFO leaving. But it's normally the Roach theory. You see one Roach, you know there are more. And when the CFO leaves, it's always a problem, especially when they miss revenues. The CEO wanted him to be more aggressive, and he decided it wasn't worth his reputation. So everybody runs like hell. We'll be back in a minute.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. A lot of discussions in the. Didn't remember what it is, but Jaeger bombs, Red Bull and Jägermeister. And I've read somewhere, I think it's either 30 or 35% of a lot of these young people bars are Red Bull and Monster energy drinks with things like Jägermeister and vodka drinks. And yeah, they keep you drunk and awake. And that's what the kiddies like this day. I said, when I was well, yes, everybody was, I said in my day, I had to go uphill to school 20 miles each way. But, of course, we only had the ability to buy Mad Dog 2020. It was what they called fortified wine. Basically, 50% alcohol wines. And it came in incredibly brilliant colors that normally ended up all over the parking lot. At the young age, you didn't know how much you could drink. And that Mad Dog 2020 was bright colors all over the parking lot for most of the people that did not know their limitations, as Clint Eastwood used to say. But Mad Dog 2020. Before my generation, it was Thunderbird, but there were always horrible fortified wines to do that. But I digress. Had a question in the den to look at Herbalife. And if there's an entry point, I guess the question is whether or not this thing's going to be a short squeeze candidate. And I would probably stay away from this one. It is too easily manipulated to the downside. And you've got Icon and Ackerman going at it out here. The bias is probably higher, but there's enough bad news in this one that I would try to stay out of it. I think there are better ones out here. In fact, I don't have any right now, but I probably will try to get some for Monday. What you want to see is these highly short stocks go sideways for a few days, like maybe 5 or 7 days. That's a good indication that you've got someone coming in and buying up stock. There's a bid underneath it, i.e. it's not going any lower. These things will go sideways 7 to 12 days. Sometimes no one's ever had a name for that pattern, but I call it kind of the Lazarus pattern. I actually scan for them, and I want to see stocks that are going sideways for a number of days. A lot of times you're going to get one bounce to the downside after it goes sideways, and that is the head fake in the short squeeze. Everybody piles on that side, and then the next day it just starts going up, and it never quits. At least until the shorts squeal. And that's what you're kind of looking for. You want a stock that's got huge short interest. You want it to be dead. I don't like that this is a downtrend already. I would rather see this thing going sideways in fact, maybe it does. Maybe in 2 weeks from now, Herbalife goes sideways for about 5 days, 7 days. Then you could buy into this thing and then look for the short squeeze throughout the end of the year. But you want to see boredom. You want to see a bid underneath it, and that bid underneath is almost always an operator. You'll see, the people on the high side of this thing continue selling short, and the people that are the operators that know that they're going to squeeze the stock will be buying it underneath, and it gets an incredibly narrow trading range. And you get that for 5, 7, 15 days or something. A lot of times you'll get a little pop down, and that'll scare out the longs, and then it just rips to the other side starting the next day. And that's the pattern I'm kind of looking for to get in longs for short squeezes throughout this fall. Like I said, I haven't bid on any for the short term. I've got some that I like for the longer term in the Tech Insider, but that's about it. So still going to have to look extremely close. See you in about an hour and 20 on the Tom O'Brien Show with the Tech Insider. I'm on my way. See you then.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.